Alrighty, folks. Welcome to this morning's development seminar on income tax. We've thought that this was a good time to do it. We've been wanting to do a tax development seminar for some time, but with the current, with the proposed budget and tax changes in the air and made so public this year, we thought, hey, this is a good year to do it in. And so, obviously, as a wealth engineer, you do have some tax responsibilities, and so we thought, well, let's get into the details around that. Then we'll put this into the basic series of training on the app. It'll be there forever, so if ever you want to refer back to it, you've got it there. Important for everybody to understand tax in South Africa. As a generally socialist state, it is critical that we pay tax, otherwise the system doesn't work. And in South Africa, the system doesn't work. I'm sure you've noticed. And the fundamental reason for that is because we don't pay tax. And so any major socialist state around the world, Australia, Norway, Sweden, those that have been successful in running socialist states have been successful because 99.5% of their population pay tax. In South Africa, we've got a far smaller percentage. It's estimated at around about 7.5 million people pay tax, but of that, really only about 2.6 million are contributing significantly to the fiscus, which is quite interesting because if you saw the proposed budget for 2025-2026, they want to take just under R1 trillion from the taxpayers through personal income tax. R1 trillion. So there's 2.6-ish million people that pay income tax of a significant value. They're going to take just under R1 trillion from those people in the next year. Can you see why most South Africans don't want to pay tax? Because what do we get for it? Do you see improved roads, better water supply, greater, or do we see piles and piles of corruption? Guys flying around in their private planes, Lamborghinis, Rolls Royces. I always enjoy Main Road, William Nicol intersection here on a Saturday. Then you can see where your taxpayer money's going. Yeah. You can go stand there. You'll see where taxpayer money. So it's a problem we have to solve. We're a new fledgling country in many senses. It'll take another 100 or 200 years before we get all of these kinks out of the system. At the moment, we are struggling. But nonetheless, if we are to solve the problems in South Africa, as we as DuePoint wish to do as an entity, we want to contribute towards a greater contribution into the fiscus as a business. And so as we create wealthier and wealthier wealth engineers, we want them to become law-abiding, legitimate taxpayers, contributing into our economy in a way that we can then start seeing physical changes in our country. And so the payment of income tax is important. It's important for that. And we're going to run through that this morning through this development seminar. All right, so you would have noticed that we've said income tax is part of the wealth maintenance pillar of protecting your assets. So if you go back through our training, you will find Wealth Creation 101 and 102. Those were two training sessions I did on how to become wealthy. There are 3 steps in that, and one of the pillars is being able to protect your asset. Once you've built your asset, you don't want it to be gone. You don't want it to be eroded away or taken away. You want it to be protected. And income tax forms part of the protect your asset pillar in being a successful, wealthy person. So the asset protection part forms 3 pillars with regards to how it keeps it safe. The first is through compliance. Compliance is absolutely critical in keeping your assets safe. At DuePoint, in order for us to maintain DuePoint as a business, we have to be 100% compliant. If we are not compliant with the legislation, they close us down. Everybody loses. Okay? So I spend at least 8 hours a week, working hours. It's a full day a week just on compliance at DuePoint. So if anybody ever says, no, there's no real cost to compliance, understand it's my salary for a day every week. That's how much time throughout a year I spend just on compliance at DuePoint. Okay. Now, compliance is critical, as I say, because otherwise men with guns come and take your things away. They do. Men with guns arrive at your office and take things away. That's how it works, okay? So being compliant is critical. Under the compliance pillar at DuePoint, we've got your Wealth Engineer Code of Conduct. All of you have got access to it through your app. Read it, understand it. It'll help you be compliant and ensure you don't lose your channel at DuePoint, okay? The next thing is FICA. FICA is a critical step in compliance these days. There's a lot of pressure from the FIC, the Financial Intelligence Center, who is under a lot of pressure from the FATF, which is the international FIC. And they are putting pressure down, and so that falls onto us as the consumers. We need to be compliant with regard to the FICA or the FIC Act, okay, which means we must always have our latest proof of identity and address in the system. And then taxation, and that's what we're going to be looking at today. Taxation is critical. If we do not pay our taxes, men with guns come and take everything we have. No, I'm not even joking. Men with guns will arrive at your house and will take everything you have. That's how it works, you see. It's a very democratic system. Yeah. Alrighty. Part of protecting your asset is, of course, succession planning. What happens when you go? In the DuePoint system, we talk about having multiple first pointers so that you're earning throughout your channel, and you should have an excess of qualified first pointers so that if you lose some, you're still earning throughout your channel. This then allows for a multi-generational planning and training of your asset. What that means is, as your children come along, you've prepared your channel properly and are able to hand it over to them so that while they learn to do the business, you've got insurances built in with regard to the size of your first point. Okay, that's not what we're going to look at this morning. You can go and look at other training where we get specific about that. And then the third part of asset protection is insurance. You need to protect yourself against shock loss. What is shock loss? When someone in your family dies, you have to pay for their funeral. The cost of that funeral is a shock loss to you. You did not expect the loss. It came out of nowhere. All of you have experienced that. We know particularly in the black South African community, you are responsible for the burial of your family members. And when they die, there's a cost. It can be mega. I mean, I've heard of funerals costing 200, 300, 400,000 rand. Everybody in the family's got a contribution with 20, 30, 40, 50,000 rand a head to pay for that funeral. That's a shock loss. So you want insurance in place so that when your mom dies or your dad dies, you claim on your funeral plan. And you get your 30, 40, 50,000 rand from your funeral plan. Now, that's not a loss to you. There's no shock loss. Car insurance. If you own a motor car and you have a car accident, it can be R1 million worth of damage to your car. Maybe you've damaged somebody else's car. Now you've got to pay them too. That's a shock loss. If you have comprehensive motor insurance, there's no loss to you. You claim on your insurance, they pay for the damage. Okay, do you see what I'm saying? So protecting your asset is making sure you are properly insured. People always talk about insurance as a grudge purchase. I think that's the most ridiculous thing ever. Insurance is the absolute best thing ever. I had a motor car accident in 2022. January 2022. Do you remember all the load shedding? William Nicol Main Road intersection, lights were off. Guy didn't understand the intersection, came from behind a bus, hit 3 of us in the intersection. Hit 3 of us. My claim to repair the damage on my car was bigger than every single insurance premium I've ever paid in my entire life. For every insurance policy I've ever had. So all the amounts that I'd paid over the years for my medical aid, my car insurance, my home insurance, if I took all of those monthly premiums and I added them all up, it was less than what the insurer had to pay to fix my car. So far, and I'm 47, so far I've had free insurance my whole life because of one claim. Do you see? How can I call insurance a grudge purchase? Insurance is not a grudge purchase. Insurance is the best thing ever. It's the absolute best thing ever. I claimed for my insurance, I fixed my car, I drove away, it cost me nothing. And I got all my premiums back in the cost of repairing my car. Do you see what I'm saying? These are things that protect your asset. Because without the insurance, your asset dies. You now have to sell your asset to pay for the shock loss. You have no asset anymore. It's gone. You don't pay your taxes, they come and take your asset away from you in lieu of the taxes you have not paid. Gone. If you do not protect your asset, when you give it to your children, they squander it and it's gone. Do you see what I'm saying? So, protecting your asset is part of how wealthy people stay wealthy. Do you see what I'm saying? And so this is very important. It's why today we're going to be looking at taxation. A lot of these we have other training on. Jump into our basic series, etc., and you will find training on the other ones. But today, taxation is the leg we're going to be looking at, and specifically income tax. Tax that we as the people on the ground generally end up paying. I liked Rob's pictures. Just this. It's the piece of the pie that you don't get to eat. You made the whole pie. You baked it. You paid for all the ingredients, but you have to give away. Taxation. We're going to look at 5 things this morning on taxation, income tax. How does tax protect my asset? We've looked at a little bit there. Your responsibilities as a wealth engineer with regards to tax. We're going to look at the South African tax framework and how it fits together. And we're then going to say, well, how does that apply to you in this context? And then how do we as DuePoint help you with regards to this? This is what we're going to be looking at this morning. All right. So for the 2025 year of assessment or tax year, which ended on the last day of February, 28th of February. So tax years in terms of the government run from the end of February to the end of February every year. We have now entered in March the 25-26 tax year. All right. We've just finished the 2025 tax year on the 28th of February. That is what I'm going to be looking at today. For those of you who are watching this training in the years to come, please understand that tax law changes all the time. And what I'm teaching this morning may not be accurate anymore. You will need to go and update yourself on whatever the latest regulation is at the time. But for the 2025 year of assessment, this is how the tax landscape looks. Okay? We are treating this as a high-level seminar on tax. It is not the textbook on South African tax. I spent 4 years at university studying tax. 4 years. That's how much there is. If I pull the Tax Act out for you, it's about that thick. Okay? I can't do that in an hour this morning with you. Okay? So this is not the textbook on tax. This is a high-level seminar. We're going to use this as a start to your journey in understanding taxation. Okay? This is the introduction to tax, and that is all it is. If you want specific details, get a qualified tax practitioner to help you. We're going to be talking about that a lot this morning. Get somebody to help you. It's very affordable, and they can help you out. They know all the details. All right, so important that. So how does tax protect your assets, okay? We've looked a little bit at it, but fundamentally remaining legal and compliant is critical. Where you have something and you do not abide by the law, it is taken from you. It is taken from you. Protecting your channel by paying taxes, and you'll have an income for the rest of your life. This is very important. People who don't pay their tax end up where? In prison. That's where they put you. You read about them in the newspaper. Tax fraud, tax evasion, that sort of thing. You end up in prison. The men with guns come, they take your assets, and they put you in prison. Okay, so if you go and look through the fines for not paying tax, it starts with things like they will charge interest on whatever you owed them. So you owed them 100 Rand for the last 10 years, but you didn't tell them. When they find out, they put interest on that 100 Rand for 10 years, okay, which is massive. It's compounding interest. So suddenly you owe 1,000 Rand when you should have just paid the 100 Rand 10 years ago. But then they charge you a 100% penalty, which means that they take the amount and they double it. So now you pay 2,000 Rand now when you should have paid 100 Rand 10 years ago. You see what I'm saying? That's how they hit you. And it gets crazy. And if you go, but sir, I can't afford that, they go, it's all right, the jail will look after you for the next 10 years. I'm being dead serious. So your penalties are massive financial fines and jail. That's what you're... So paying tax is critically important. It is critically important. It protects you and your asset in this entire process. Your responsibility as a wealth engineer at DuePoint, well, fundamentally, you need to remember you're an independent contractor. You are self-employed. You are not an employee of DuePoint. You are not a representative of DuePoint. You are self-employed as a wealth engineer with us. That means you have to pay your own taxes. You are now a business owner. Every business owner has to pay their own tax, and that's the position that you're in at DuePoint. Now, there's a lot of caveats in this. Most of you don't earn enough to pay tax. We're going to get to that, so you can relax. In addition, those of you who do earn enough to pay tax, because you're an independent contractor, can offset your expenditure in producing your income against that income, which means that most of you won't pay tax anyway. Okay, so we're going to get there in a minute, but your responsibility is to pay tax. Okay, that's your responsibility. We put into your app, into the DuePoint app, a declaration. The very first time you open your DuePoint app, you have to select, yes, I agree, which is effectively your electronic signature on the fact that you are an independent contractor and you are responsible for your tax. Once a year, that declaration is going to come back up in your app. So every 12 months after you've signed it the first time, you're going to have to sign it again. Okay, that's important that you do that. Well, you can't move past that. You have to sign it, because at DuePoint, that is the state you're in. We then supply you with monthly and annual tax certificates. Okay, I'm going to show you where you find them in your app, but every month we give you the certificate that you are going to utilize to pay your tax with. Okay, and you can use them to submit to SARS. But as I said to you, the good news is that independent contractors can deduct their expenses in the course of creating their income against their income. And that dramatically reduces your taxable income. Dramatically reduces. We're going to look at that. Employees can't do this. Employees can't do this. As an employee, you earn 20,000 Rand, they take 30% off, bang. You don't get to offset your expenditure against it. So you pay maximum tax on your income as an employee. Maximum tax. As an independent contractor, you can offset your expenditure against it, which I'm going to show you. Again, DuePoint putting control back in the hands of South Africans. You have control. As an employee, you have no control. I've said to you before, you can't choose how much you're going to earn, what your increase is going to be, whether you get a bonus, whether you're even employed. Well, let me tell you one more thing. You can't choose how much tax is taken off of your income. You can't choose. They propose the new budget, the next day, the new tax is taken off against your account. In the last 5 years, we've had 2 income tax increases. And that's meant that from the 1st of March, on the 28th of March, you were paying, say, 30%. On the 1st of March, you were paying 31%. You didn't get to have a debate with them. You didn't go, I have seen nothing for my tax. You're not taking another % of my income. No, you had no say in it. The very next day, they took another % off of you, and then they did it again, and now they've just increased VAT. Yes, ladies and gentlemen. Can you feel how you do not have control in a socialist state? But we all want it, don't we? Free stuff. Free stuff. Yeah. Yeah. But independent entrepreneurs working in a free market like you as wealth engineers at DuePoint have control. You have control. You see what I'm saying? So much better to be a wealth engineer. So the South African tax framework, Rob scattered the pieces for this. The South African tax framework, let's have a quick look. Very, very important, okay? Very important. We're going to start with a couple of key definitions straight out the regulation. I've extracted them from the 2025 tax year regulation. This may change into the future, ladies and gentlemen. So if you're watching this in the future, please go and check again what the regulation is. But as it currently stands, a taxpayer, you are a taxpayer. This is straight out the piece of legislation, out the act. You are a taxpayer if you earn taxable income which is above the tax threshold. We're going to talk about that in a moment. You must register as a taxpayer with SARS. All right, out of the guidance that's on the internet based on tax companies and on SARS's guidelines, I've put together a few extractions at the bottom as well. If you are registered for income tax, you will be required to submit an annual tax income return to SARS based on the Gazette. The Gazette is the piece of legislation. Okay, the legislation, you can see the reference at the bottom for future reference. There's the act that we've used for today. Gross income. What is gross income, ladies and gentlemen? Gross income is the total amount that you receive in cash or otherwise. Doesn't have to be in cash. If your employer gives you a car, that's otherwise. If your employer pays for a holiday for you, that's otherwise. Okay. Yeah. If your employer gives you rents you a house and pays the rent for you, that's otherwise. It's all added together. In cash or otherwise, received by or accrued to or in favor of the resident during such a year of assessment, excluding receipts and accruals of a capital nature, that's buildings, land, or jewelry. So, what it means is, when calculating what you earned in a year, you need to take your salary, you need to take what rent the business paid for you, what holiday they paid for you, what car they gave you, what medical insurance they gave you, anything they gave you, you've got to add it all up. And then you say, I earned. Okay. So the little cash piece that came into your bank account every month is not your total income. Your total income is everything you were given. That's the way the tax man sees it. Because the tax man wants to have a little bit of everything. You've heard of capital gains tax. You know what capital gains tax is? You buy a house. You pay 25 years on a loan to pay the house off. And you sell the house. But over 25 years, the house was worth 100 rand. Now it's worth 200 rand. The government wants a piece of that extra 100 rand. Yeah, that's capital gains tax. He says, oh, you made a profit on your house. I want a piece of it. That's capital gains tax. That's not income tax. Everything you do has tax. Everything. You transfer the house to a new person. You've sold the house. You've paid the capital gains tax. You give the house to the other person. The government charges you 10% transfer duty. That's tax. So now you've paid capital gains tax at 28%, and you pay another 10% on transfer duty. That's 38%. You haven't moved yet. Okay. All right. And then they increase VAT. All right. Definition. Deductible expenses. A deductible expense. So you've got your gross income. You've worked out how much you've earned in total. But now the government says you can deduct a few things. But this is only if you're an independent contractor. And it says a deductible expense. Any money is claimed as a deduction from the income derived from trade that are wholly and exclusively laid out or expended for the purposes of that trade. Okay. So you are an independent contractor. You're earning 100 rand a month, but you're spending 20 rand on petrol driving to all your customers. It can be deductible, okay? You have a cell phone that you use exclusively for your business. Many of you have exclusive cell phones that are only used for DuePoint, okay? That's a cost exclusively in the purpose of the trade. That cost can be deducted against the income, and so on, and so on, and so on, you see? And so we're going to get to how it works in a minute, but being just aware of the definition. Remuneration. So we had gross income. Now we got remuneration. You see why it takes 4 years to study tax at university, okay? Remuneration is income from the employment. So we call it your salary, you know, your wage, your whatever. That's actually remuneration. It forms part of gross income. It's the one. It's remuneration. Remuneration is only income from an employee, such as salaries, wages, bonuses, overtime, taxable fringe benefits, allowances, and certain lump sums. Okay. So just remember, remuneration equals salary. Provisional taxpayer. Not sure if many of you have heard about that, but this is what you're going to become as wealth engineers, is provisional taxpayers. Any person who receives income or to whom income accrues other than remuneration. Okay, so what was remuneration? It's a salary. If you are a person who earns something other than a salary, you're a provisional taxpayer. Okay, so that means that you're not earning a salary, you're deriving income from your trade. Plumber, electrician, doctor, engineer, wherever you're getting your income and it's not a salary, you now become a provisional income. It can be interest as well. If you've got a large amount of interest coming from the bank, we're going to look at the thresholds now, you can become a provisional taxpayer on the interest. Remember, interest is taxable. Yes. To stimulate savings, they tax you on interest. Yes. Everything is taxed, ladies and gentlemen. The air you breathe is next on their list. It's next on their list. They tax you on how much carbon dioxide comes out the back of your car. They do. No. All right, so let's work out then. Fine, we know what all these things are, but when do I start paying tax? At what point am I liable for tax? So tax is only paid by people who earn a certain level and above. Okay? Everybody else doesn't have to pay tax because the theory is they can't afford to live if they're paying tax on those numbers. Okay? Now, actually, it's not true. Everybody pays tax because you pay VAT. You can't escape VAT. You walk into a shop, you're paying VAT. You see, you buy a car, you're paying carbon tax and VAT. You know, like you pay VAT everywhere. But income tax, they don't take from you until you reach a certain, what they call threshold, a certain level, then you start paying tax. Okay. The first level is 95,750. This is in 2025. 95,750 Rand per annum. So if you are earning more than 95,000 Rand a year, you hit the first tax threshold. However, this is taxable income. What do we know about taxable income? It's gross income, which is everything, less deductible expenses. Okay. If that's more than 95,000 Rand, then you are liable for tax, okay, on the difference, effectively. This is if you're under 65. If you're over 65 and under 75, then it lifts to 148. They're trying to help pensioners out. So if you're a pensioner, you only pay after 148. And if you're over 75, well, then you only pay after it's 165,000 or more. Okay, so you see how small this number is here? It's not a big number, is it? Eh? Yeah. All of you should be paying tax. You see what I'm saying? Before you were at DuePoint, you should have been paying tax. Yeah. Okay, so let's work it out monthly. 95,000 translates to about an average of about, call it 8,000 Rand a month. So as soon as you hit 8,000 Rand, and that's net again, remember it's gross less deductibles. As soon as that net amount is above 8,000 Rand a month, you need to be paying tax. For 65 to 75, it's about 12,000 Rand a month, and if you're above 75, it's about 14,000 Rand a month. Okay, if you're above that, you need to be paying tax. Okay. So how much tax do you pay then? Alrighty, so we've got to get above those tax thresholds first. So the tax, once you've calculated your tax, your gross income less your expenditures equals a number, you take that number and you put it in the table. And that table will tell you how much you pay of that to the receiver of revenue, to SARS. Okay, not per month, this is per annum. This is per annum, always per annum, okay? What I'm showing you here is the average, okay? So, if you are earning, as I said, that 95,000, so that's about 8,000 Rand a month, 8,000 up to 19,000 Rand a month. From 8,000 to 19,000 Rand a month, you're going to pay 18%. So let's say you've got 10,000 Rand is your net, gross income less deductibles is 10,000 Rand. The 10,000 Rand, they want 1,800 Rand of it. So they can fix the potholes in your street. But they don't fix. No, but they got private jets and they've got money in couches. Okay, it's your money that's in the couch. Alrighty. Okay, it's 1,800. If you earn, okay, then between 19 and 30,000 Rand, they're going to take 26%, a quarter of your money. Oh, you are? Is this the first time you've seen this? Is this the first time you've seen this? Yeah. While we are not the highest taxed country in the world, we are one of the highest taxed countries in the world. And we have the least visible back to us from it. So if you go to Australia, Australia is probably in the top 3 highest taxed. I mean, it's crazy. You add up all their taxes like 60%. So if you earn 100 Rand, the government takes 60 Rand, okay, or all in all, okay? But you go there, you've got a working medical system, you've got roads, you've got power, you've got lights, water, sewer, everything, protection, safety, police, army, you've got everything. But they're taking 60 Rand of your 100. Here in South Africa, if you add it all up, we're on about 55, 56, 57%, depending on where you're in the tax. So if you go to the top bracket's like 55, 56, 57%. So they're taking almost 60 Rand of your 100. They're taking 57 Rand of your 100, and you get nothing for it. The guy up here, he's not getting free hospitalization. He's not getting free hospitalization. He's not getting the grant. He's not getting any social service. And he has to drive on the roads that are finished. He has to live with load shedding, collapsing water infrastructure, and very soon a collapsing sewer infrastructure. But 57 Rand of his 100 is being taken every year. Can you see why we've got so many people leaving South Africa? Can you see? And it's that bracket there that's leaving. It's that bracket there. All right. So when next you have to make a political decision, are you going to think beyond the 370 Rand? And the T-shirt and the loaf of bread in the stadium? No, I'm asking you seriously. We have serious political decisions to make in South Africa. As an emerging third world country, we should be paying half this tax. Half. Half. Oh. But you heard our finance minister said, I'm sick of your austerity. I'm raising taxes. Did you see him on YouTube? He was on SABC. He said, I woke up one morning and he said, I'm sick of austerity. But what he meant is, I'm sick of your austerity. I'm raising taxes. Now, what austerity means is government cutting costs. Smaller government, less government employees, less benefits, lower salaries for governments, more money available for infrastructure, education, health, all of that. He said, I'm sick of your austerity, I'm raising taxes. He said that on SABC. So I'm not making it up, I'm just quoting what I saw. We're saying, as an emerging third world country, we should probably be running on half this taxation. But we're on double the number we should be. And we've just had taxes increased again. Important political decisions that need to be made, and important ones. Yeah. All right. So this climbs up. So as your income grows and your net number after expenses rises, you're going to move up this table. Okay? You're going to move up this table all the way down to the maximum, which says that anything above 151,000 Rand a month means you're going to pay effectively half of your salary to government. Okay? So if you earn 152,000 Rand a month, which is a lot of money, he's going to take 75,000 Rand of it. He's going to take it from you. This happens every day to everybody, okay? That's how it works, all right? And so this is where you have to fit yourself in. It's very important, which means you need to do some budgeting, ladies and gentlemen. You need to budget, all right? And now this is again where a tax consultant can assist you. A tax consultant can start assisting you in working on what you're going to need to pay. Might not be a lot, might be a couple of grand a year. Just depends on what your deductibles are, your exemptions are, etc. from your gross income. They'll work it out and they'll be able to take it around. Then when you earn 20,000 Rand from DuePoint, take 2,000 and just leave it in the bank. Leave it in the bank. Each month, you just put your two, and once or twice a year, we're going to show you as a provisional taxpayer, you pay across that amount. It doesn't affect you because you've been budgeting for it every single month. This is why you need to know this stuff. How it applies to you. Okay, the framework. Well, all combined income creates your gross income, which means that for each of you, you've got to take a salary if you've got a job, plus what you're earning from DuePoint, plus any other income you might be earning. Some of you do multiple things. That gives you your annual gross income. Then you deduct your exemptions and your expenses. You don't need to know about any of this. We're going to get to it in a minute. And if it exceeds the 95,000, you must register as a provisional taxpayer with SARS. You must. That's the law. That's the Gazette. It says you must, okay? It says you're liable for tax, you've got to register, and you've got to submit returns to SARS. All of us do. I submit a return every year. So do all of my staff. It's what happens. It's normal process, okay? As a provisional taxpayer, you're a person who receives income, do you remember? Or to whom income accrues other than remuneration. That's you, because you're earning from DuePoint. It's not a salary. You're a payer. So you need to now register as a provisional taxpayer, okay? Remember, your DuePoint income is not remuneration because it's not a salary. You're not employees of ours, okay? And it falls out, whatever you earn from DuePoint falls into other than remuneration. That's what you are, okay, with us here. Okay, so if you do not have a tax reference number at the moment, which I would imagine is pretty much all of you, okay? If you do not have a tax reference number at the moment, then you need to register on the eFiling, okay? You have to register on eFiling. If you've got tax numbers, great. No, I'm great. But I know that the vast majority of South Africans don't. Just statistically speaking. I mean, there's 7.1 million people, I think, that are registered on the system of 64 million. So I know it's 10%. It's 12%, okay? So I'm saying to you, you've got to get a number. If you don't have a number, this is how you get one, okay? Once you've registered, SARS will give you a number, a tax reference number. All you need is a valid South African ID, and you can register. Okay, this is what the e-filing site looks like. This is the website. You jump on it. You click register in the bottom right-hand corner. Okay, if you haven't got one, this is being recorded. You can watch it again later. And then once you've registered, you'll receive your tax reference number. You need to log in. They'll send you your login details. Then it gets a little bit more complicated because you've got to now register as a provisional taxpayer. So you've got to go through. I went through this. I worked this out using YouTube and Google and ChatGPT. That's how complicated it was for me to work out how to register as a provisional taxpayer. Absolutely ridiculous. It's not like, do you wish to be or do you fall within the ambit of provisional taxpayer? Click here. No. You have to go to Home, User, Tax Types, Manage Tax Type, Activate Provisional Tax, and then Submit. I'll show you what that looks like. Okay. You got to click. This is you once you're in. Okay. Click on Home. All right. Then you click on User down here. Then you click on Tax Types over here. Then you click on Manage Tax Types, and you'll see now it brings up Provisional Tax over here. Not active. Here's your active. You click on Active on the bottom right, and then you click Submit, and now it converts you into Provisional Taxpayer. It's like heart surgery. Eh? No heart surgery. My goodness. All righty. I want you to listen to this, but I don't want you to memorize it or take it in. It's just massively complicated. Someone's going to do this for you. We're going to talk about it in a minute. But effectively, as a provisional taxpayer, you're required to make 2 tax payments a year. Now, the reason they do this is because the government knows you can't budget. All right? So when my grandfather was a taxpayer in his youth, when he was between 20 and 40, I think, he would go once a month down to the tax office and he would pay his tax directly to SARS. But SARS got lazy. They went, why are we doing this work? We will make it the private sector's problem. And so in around the late 1950s, globally, they got super clever. They made it your employer's problem that they had to collect tax on behalf of SARS. So now the employer every month has to take from your salary the tax amount, and they have to pay it across as one lump sum to SARS. Much easier. The responsibility now is put on the company. And if the company makes any mistake or does any error or fails to pay across the full, oh my word, prison, men with guns, all sorts of things. Okay? But it's not their responsibility. It never should have been. It should have been SARS's responsibility from the beginning. But SARS worked out, and so did the taxman around the world, worked out, no, they can't trust you. They can't trust. First of all, you're bad at budgeting. Second of all, you might try and avoid to pay it, etc., etc. So they put the employer in place to take the cash from you. But now they go, but what about all the people who don't earn a salary? We've solved the salary people. They can't escape now. But what about the people who don't earn? And that's how they came up with the provisional taxpayer. And they said, okay, the best we can do is just make them pay tax often. So we'll make them pay it twice a year with a top-up payment if they got it wrong. Now, the reason you can get it wrong is as a provisional taxpayer, you have to guess how much you're going to earn at the end of the year. Because they work on an annual rate. Remember that table was annual tax rates? Okay. At 6 months into the tax year, they make you do a calculation based on what you've earned so far and what you guess you're going to earn in the next 6 months. And they make you pay a provisional tax payment on the final amount. You haven't earned that amount yet. You don't have that money in your bank account, but you're paying on it already. You're paying on it already because they want to get ahead of the game. Before you spend it, before you don't have it, they want it. Okay? So they make you pay. Then 6 months later, you do an assessment now on your actual earnings. Okay? What have you actually done? And if it's up or down, they then refund you or you pay more. Do you see? Yeah, fun times. Okay. That's a provisional tax. This is way more common. This is what the tax payment looks like. Okay? It is beyond 99.9% of people's skills. Okay? It is just absolute estimated taxable income for the year, normal tax on estimated income, less primary, secondary, tertiary rebates under Section 6, tax credits from medical schemes, additional tax credits. Oh my goodness, it just gets crazy. Half of the normal taxable estimated income table, less employee deducted taxes, less foreign tax credits gives you your first provisional tax pay. None of us know how to do any of that. That's mad. And so don't bother. You are going to need to hire someone. So we did a whole lot of research. We looked around. Hiring a tax consultant is easy and cheap. Way cheaper than tax. It's really, Google a tax consultant in your area and you'll pick them up. They generally do tax returns for you for about 1,000 to 2,000 Rand a year. A year. You pay 1,000 to 2,000 Rand a year. They do all of this for you. They do it all for you. Your responsibility then is just making sure you can show them your income and your expenses. If you can keep good records of those things, they can put this through and do the work for you, and then you just make the payments that are required on it. Okay, so unless you're a chartered accountant or tax specialist yourself, do not attempt to do this. Okay, it is just, okay, no, the last time I did tax was at university. I'm not the right person to come to. No. You go to somebody who does this on a daily basis. They will know things because some of the things that are important, we're going to get to it in a minute, is your expenses. The expenses, it's not like you can just claim anything. I had a lunch bar for lunch today, deduct. You can't do that. There is very, very specific about what expenses can and can't be deducted and how they can be deducted. And I don't know those rules, but the tax consultants work on it on a daily basis. They know. They know what can and can't be put in and how to put it in, okay? So for tax purposes, you are an independent contractor. So when you're on the SARS website, if they say, what do you do? Independent contractor. That's what you do, okay? As an independent contractor, you create income for yourselves through your own trade. By being a wealth engineer, you are generating your own income through your trade of being a wealth engineer. You can deduct expenses directly related to that trade from your gross income. So your costs of being a wealth engineer, and there's lots of them, you can deduct. You can deduct. And those expenses, the tax specialists will know. And this can, of course, dramatically decrease your expenses. For most of you, you'll still fall under the tax threshold. You won't have to pay tax once you've deducted your expenses from it. Okay, deductible expense. I pulled this directly from the SARS guide and from a couple of tax specialist guides that are out there. These are categories of expenses that can be deducted. The specifics, I don't have the details for, but your tax consultants would. Home office expenses. For many of you, you actually run an office from your house. There's expenses, lights, water, sewer, taxes. Those are all expenses on that office. You've got equipment in there, computers, iPads, iPhones, and all of that. That's all running out of your office. Paper, everything that's in there, that's deductible. Training costs, any costs that you're having to pay to do more training comes out, including travel to and from the training, food at the training, clothes that are required for the training if it's a specific dress code, those sorts of things. Business startup costs, like I said, buying your computers and your desks and chairs and things like that. Any large capital expenses, that I would trust the tax consultant. And day-to-day trade expenses. You're driving. You've got phone calls and costs on your phone calls. And there's all sorts of things that can be deducted against your income in your trade. Okay. So tax consultants would be able to give you the specifics on those. But those are the key categories I picked up in my research. The critical thing that every guide I read said is keeping accurate records. When SARS comes back to you, they're going to audit you. They're going to say, you earned 100,000 Rand, but you only have 10,000 Rand worth of taxable income. No, I want to see how you had 90,000 Rands worth of deductibles. They're going to. They're going to say, send me every single invoice. I've been audited. Not that I'm a provisional taxpayer, but they've audited me. And they wanted, I had done a medical deduction. When you've got small kids, you know, the cost of medical goes through the roof. We couldn't believe it. We had 2 babies. It was mad how much we were spending on medical. And they weren't even sickly babies, you know, but it's crazy. And so I added up all my expenses for medical expenses, and I deducted it against my tax. Cling, audit immediately. And I had to send them every invoice, every statement, every single line item I had deducted they wanted. And I was able to do it. Here they are, look. And then, of course, they had to accept it because they were all my expenses. So as long as you keep accurate records, you can deduct, you can create, and you know that you are compliant, which is critical. One of the tips that's given is to have a separate bank account for DuePoint. And in that bank account comes your DuePoint income and your DuePoint expenses. That's the easiest way to do it. Now you've got the bank keeping the record for you. You've done what SARS did. You've made it's somebody else's problem to keep your records. You've made it the bank's problem. So a separate bank account that's exclusively used for DuePoint and DuePoint expenses is a fantastic tip that's out there. And then, of course, keeping invoices and receipts for all qualifying expenses is critical. There are actually phone apps these days that will do it. So as soon as you have it, you take a picture. It stores a picture of the invoice and puts details into the app for you, and puts it in months and years for you, so that when you get to the end of the year, you can just generate a report straight out the app. And it goes, here are all the expenses, and it's got all the backup documents saved in your phone for you. Fabulous. Fabulous. So download the apps. That'll help you with this sort of stuff. And then having a good filing system at home is really, really critical. For all your receipts and expenses, it just makes life so much easier when you've got to find the actual physical documents. You've got them. Jane said to me, because Jane's done this for many years, she's been a provisional taxpayer for many years, she says she has a large A4 envelope for every month. You walk into a house, she says, I've got a drawer, pull it out, I'll go, here's 2022. January, February, March, April, May, June, July, August, September, October, November, December. One envelope for each one. And you just pull it out, and in there are all of her receipts and all of her statements. A good file. So when she submits tax and they audit her, she just goes, whoop, post. to SARS and says, good luck, there they all are. See? Compliant. Yeah. 100% compliant. Have a good... You're business owners now, ladies and gentlemen. You're not employees. You're doing the real... And as a result, the reward is so much bigger. But you've got to work. You've got to work. Takes 5 minutes a week. 5 minutes a week to put your receipts for that week into an envelope. 5 minutes. This is not that hard. This is not that hard. Maybe an hour and a half a year is what's required to be 100% compliant, especially if you do the steps every week and every month. It's going to take you an hour and a half a year. It's easy. And as a result, you are an independent contractor. You can reduce your tax, which an employee can't do. Employee pays maximum tax, and you have the ability to earn the incomes and have the rewards that DuePoint offers you, which you can't have as an employee. Do you see? A little bit of effort for a great reward, ladies and gentlemen. A little bit of effort for a great reward. Do not be frightened by compliance. Like I told you, I do 8 hours a week on it, every week. We have 11 regulators that look after DuePoint. 11, ladies and gentlemen, that I have to deal with on a constant basis. But if I just keep doing that 8 hours a week, we remain compliant. It's not an issue. And we get to have the greatest reward of having a business that's changing the lives of South Africans, and in time will change the fiscus of South Africa. We will be contributing so heavily from our taxes that we will change the economy we live in. That's what DuePoint does for my 8 hours of compliance a week. Now, you don't have to do 8 hours. You have to do 5 minutes a week. Do your 5 minutes, and all of this becomes very, very easy. Okay, so here's a nice example just to go. Your gross income, your salary plus whatever you earn from DuePoint, gets automatically, not automatically, but you can deduct your deductible expenses from it. There are some exemptions that come through. The tax consultants will know what they are. And that means your taxable income is, in fact, not $9,000 in this example, but $2,000. Okay? That's how it works. You're reducing your tax down to what your taxable income is, and then it's from that number that you calculate what your tax payment is going to be. For most of you, it'll be below the minimum threshold, so you won't have any tax to pay. Okay? But for some of you who are going big time, I want 500,000 Rand a month, well then 500,000 Rand a month means 45% goes to SARS. Just accept it right now. And if you don't, men with guns come and take all your Ferraris and Lamborghinis away and put you in jail. Okay? So it's up to you. This is how you do it. All right. So how does DuePoint help you? Well, ladies and gentlemen, we do a couple of things. First of all, we get you to sign that annual declaration every year. That's step one in your compliance. I'm an independent contractor. And then we supply you, as I said, with monthly and annual tax statements. So now you have your earnings on an official record, which you can supply to SARS. And then you've got your code of conduct. Go and read through the tax section on the code and just know your responsibilities there. Okay, to find your statements from DuePoint for your income, you're going to click on the menu button at the top left. That's the 3 lines. We call it the burger menu because it looks like a burger. Bread, meat, bread. Do you see it? Okay. The burger menu, click on that. That opens up the menu section. Under My Account at the bottom, okay, click on that, and it will display at the very bottom Channel Returns. Okay. You're going to click Download under Channel Returns, and look, all the statements for each month come up, plus an annual one at the bottom. Okay, these are fabulous looking things. They break it down by month for you. You can see how much you earn per point in your channel, and then you get a nice summarized one that you can use for tax, where it even says independent contractor at the top, so SARS knows what you are. Okay, all right, it's all there available for you on a monthly basis. Why would you need it on a monthly basis? Because you're provisional taxpayers, ladies and gentlemen. So you've got to pay twice, once 6 months in and once at the end. All right? And so giving you monthly ones allows you to do that, and an annual one then allows you to know if you are accurate or not with SARS. Okay, very important. Your responsibility in summary, therefore, is to register for tax. As a South African citizen that's earning, you must have a tax number. Hire a tax consultant immediately. As I said, Google one in your area. There's millions of them. They're like ants out there. And a couple grand, 1,000 to 2,000 Rand a year. And they'll do the grunt work for you. They'll say, show me all your expenses. And you can show them all. And they'll go, okay, that one's deductible. That one's deductible. We can take half of that one. We can take 3/4 of that one. You know what I'm saying? They will know all of that for you. And they'll surprise you. I mean, I remember in Australia, we lived in Australia for about 2.5 years. We had to pay tax in Australia. And I got a tax consultant. I don't know what the Australian tax is. Guy was amazing. Came in, he said, we can deduct that, we can deduct that, we can deduct that. Well, I was amazed. He even made money for me. I got a refund. Okay? Which can happen, incidentally, especially with provisional tax. You may pay, and then at the end, you've overpaid because you didn't earn as much as you thought. They've got to refund you the difference, you see. So it's not always bad news. It's only mostly bad news when it comes to tax. But yeah, so get a tax consultant like Monday. Find them and get started with your process. Supply them with your DuePoint statement returns and your expenses. Make sure you have a good filing system. Use a phone app. Those of you who are good with phones, just record everything on the app, man, and it's done. And then save for your taxes. You guys are smashing Achievers checks in there. Take one check, stick it in the bank. That's my tax at the end of the year. You know what I'm saying? No, you're done. You're done. You don't touch that. You know when it comes to payment, you pull it out, you pay, done. No, everybody's happy. You can always show a clear tax certificate. It's wonderful, you know. Full compliance safety. Okay. And then for rank 9s and above, we're going to be asking you guys to supply us with your tax number going forward because we are always under pressure from SARS because they go, these people that are rank 9 or who they're paying tax, I want to know who they are. So rank 9s and above, when you do go rank 9, please supply us with your tax number just for our records. Okay. All righty. And that, ladies and gentlemen, is income tax in South Africa. I know it's frightened the hell out of you. That wasn't my intention, but it is the effect tax has. It's not all bad news. When it comes to being compliant, we are one of the most over-regulated countries in the world. And even so, because where we just apply ourselves to compliance, you are compliant. Then you're good to go. It's okay. It's like if you have a valid driver's license, when they pull you over at the roadblock, you show them the license and they say, good day, sir. It's not a problem. It's exactly the same thing with tax. Where you are compliant with your taxation, you sleep peacefully at night. It's no problem. Catch up. If you are behind, get a tax consultant and catch up. Catch up. Get it done. SARS wants your money, so they will put payment plans in place for you and all of that if necessary. For most of you, it won't be necessary. So don't freak out too much. Most wealth engineers are not earning enough to be above the tax threshold. But as you push forward, our intention is to make many, many of you wealthy, which means many, many of you will need to pay tax. So that's why we're doing this training now, so that you can prepare in advance and start the process. Become good at filing, become good at understanding the process. Get a tax consultant you like. You might have to change them until you find a guy you like or a girl you like. And you can change them every year. It's very simple. They're a supplier, like a plumber. You know, if you don't like the plumber, you change plumbers. If you don't like your tax consultant, change them. Okay? Find the one, start building up the process for you with us, and then it's not scary, and it's not negative. Now, incidentally, ladies and gentlemen, don't go, I'm not doing DuePoint because of tax. You have to pay tax for everything you do. You go to Amway or Golden Products or Forever Living or Herbalife, if you're earning, you have to pay tax. SARS doesn't care the name of your income. He does not care what you call your income or where it's from, okay? So this is not like, oh, you can be grateful that DuePoint has taken the time to teach you about it. None of the others do. None of the others do. We've just taught you about it. So don't think this is special for DuePoint. This is everybody, every form of income. I told you, everything you sell, everything you do, everything you earn is taxed, okay? So be efficient, get yourself ahead of the game, and then you sleep at night. And you become wealthy. You will become wealthy with DuePoint. 55% of 500,000 Rand a month is a lot of money. Okay, you keep going. All right, ladies and gentlemen, that's it. We'll put this on a basic series. If you ever need to refer back to it, go back to it. But let's get compliant, let's protect our assets, and then let's go make some money. Thank you very much, ladies and gentlemen.